Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about a powerful combination of two key indicators: the MFI, the Money Flow Index, and the RSI, the Relative Strength Index. These tools, when used together, can help you identify high probability trade setups, spot reversals early, and better understand market momentum. So stay with me until the end because I'll not only break down how these indicators work, but also show you a step-by-step strategy to use them effectively in your trades. So without wasting any much of your time, let's get started. So first of all, I'll explain these indicators. But before that, you should know that this is the TradingView platform and we are on the 4-hour time frame. And we have the two indicators on our charts. This is the MFI and this below is the RSI. This is the MFI, this is the RSI. Now for the MFI, which is the money flow index, it is a momentum oscillator that combines price and volume data to measure buying and selling pressure. It ranges from 0 to 100, with levels below 80 indicating overbought conditions, levels above 80 indicating overbought conditions, and levels below 20 indicating oversold conditions. And by factoring in volume, the MFI is highly sensitive to shifts in market sentiment, meaning small tiny shifts like this can quickly affect the MFI. You can see sharp movement just at the same time when price is having that sharp movement also. So the MFI is more sensitive because it factors in volume. So key features is, like I said, overbought and oversold signals, volume sensitivity, and you can also use it for divergence, which confirms potential trend reversals when price moves opposite to the MFI. So for the RSI, which is the second indicator we'll be using in this strategy, the RSI is a momentum oscillator that measures price movement strength on a scale of 0 to 100, just like the MFI. Levels above 70 are considered overbought and levels below 30 are considered oversold. So unlike the MFI, RSI focuses solely on price changes, making it less sensitive but more stable. So the key features of RSI is overbought and oversold conditions, just like I said, momentum analysis, which gauges the strength of recent price movements, and trend confirmation. It helps validate trend when paired with other indicators. So without wasting any much of your time, let's quickly dive into the strategy. How can you use these two indicators to trade in the market? Now it's very simple. I'll show you all about that right now. The first step is setting up the indicators. So you should have your indicators like this. If you're on MT4 or any platform you're on, set up your MFI and RSI and use the default 14 period settings for both indicators. You can see the 14 period. Use the default 14 periods. And for the MFI, focus on levels above 80 and 20. For the RSI, should be 70 and 30 for overbought and oversold conditions, respectively. So the next step is identifying trade setups. Now for trade setups, to find the buy setup, wait for the RSI to drop below 30 and the MFI to drop below 20. Now you can see that happening here. We're talking about buy setups. You can see that happening here. We have this drop below 20. Okay, this didn't necessarily drop below 20, but it was just as close to it as possible. But RSI dropped below 30 and here also dropped below 30, giving us this double bottom. Nice. Now you can see also that the MFI corresponds with the RSI. So once you've seen all of this, you should enter a buy position when both indicators stay turning upward, confirming a potential reversal. Now, I advise that you use price action before you enter your trades. You could use support and resistance key levels to place your trades. You can also use candlestick patterns to place your trades. We have this key level here. Is a key level, and you have price reacting off of that after we've seen our price, we've seen the RSI and the MFI rising above, from below 30 to above 30, from below 20 to above it. So we should be looking for buying opportunities just immediately after, And you can see this opportunity that came out to buy, quickly scalp the market. Just enter here. For traders who use S&R, you can see this corresponds wonderfully well with the S&R. I've talked about S&R, which is support and resistance lines using a line-based chart. So we've talked about this on our channel. So ensure you give us a follow, give us a subscribe, and stay tuned on our channel to learn more strategies like this. So you can see that's how we were able to enter this buy trade using the RSI and the MFI together, and also using key levels, support and resistance in the market. So this is for a buy trade. Now let's quickly look for a sell trade using this strategy. Okay, we have a sell trade here happening here. We have the MFI giving us above 80, have levels very close to 80 showing overbought conditions, and we should be looking for selling opportunities. At the same time, we also have the RSI giving us this push above 70 showing overbought conditions. So we should be looking for opportunities to sell or short this market at this point where price is giving us this consolidation around here. Now we'll talk about divergence later because I can see it clearly happening here. But before that, after we've seen price dropping below from 80, from 70 all the way down, we should be looking for selling opportunities. Now you can see this uh there are several candlestick patterns. You can see this three inside down candlestick pattern. I'm just gonna circle it. Have the green candle followed by two red candles which close above the first candle, which closed below the first candle. So that's a three inside down candlestick pattern. We've talked about hundreds of candlestick patterns on our channel. You should go and watch on that. And also you have this engulfing, bearish engulfing candlestick pattern signaling bearish momentum entering the market. Together as we have our RSI and MFI giving us the confirmation also. So we just look to short this market. We take profits at 1:2, 1:3 risk to reward ratio. Remember, we saw the confirmation using our overbought conditions on the MFI and RSI. So that is that for the overbought and oversold conditions. Let's quickly talk about divergence. Now, both indicators can be used when spotting divergence. Divergences between price and these indicators can provide additional confirmation. A bullish divergence occurs when the price makes lower lows, but the MFI or RSI makes higher lows, signaling weakening selling pressure and a potential reversal upward. Conversely, for a bearish divergence, it happens when the price makes higher highs while the indicators make lower highs, signaling weakening buying pressure and a potential reversal downward. I'm going to explain that. You can see price here giving us this series of higher highs, higher lows here. At the same time, our MFI, you can see giving us lower highs. You can also see the RSI here giving us lower highs also at the same time. So this signals divergence and a potential break, a potential reversal incoming, reversal to the downside. I also talk for the bullish example, but this is for the bearish example. So after we've seen this, we're looking for ways, we're expecting this trend to switch from bullish to bearish because we've seen the divergence, we've spotted the divergence on the MFI and on the RSI. So looking at this, we could look to just trade, look to spot key levels like this one, and look to also sell at this see this pullbacks here, this consolidation here, which is to take our sell trades at the same time where we're having all of that. You can also see this bearish engulfing candlestick pattern. It's a series of reactions and rejections. All right, I can see the reaction from here using the S&R. You can see this former support level turning resistance level here. So we just need to take our sell trade from that level. Stop loss should be above this high and take profits all the way down. So that is for the divergence using the divergence. Now let me talk for the bullish example. Using the divergence, you can see price giving us lower lows, but the RSI and the MFI are giving us higher lows. It's very simple. The RSI didn't necessarily give us higher lows, but yeah, we've confirmed also you can see the RSI is clearly below 30, showing oversold conditions, so we should be looking to buy. And now it's a clear indication that we should look to buy from this area. Looking at that, we could look to place our entries from key levels like this. Remember, I've talked about this key level here already. See that key level and price reacting to it perfectly. Just look to place our stop loss below this area and I'll take profits all the way for a 1:2.69 risk to reward ratio. It's very simple. I would advise you to watch this video again, share it to your friends, and engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.